Hello, everyone. Today, we'll be talking about what is a fiduciary and why should you care? Well, when it comes to money, Destin, why does it matter that you know what a fiduciary is?
Yeah, fiduciary has been kind of a hot topic. We've heard the word a lot lately, and basically, anytime you go get financial advice, there's typically been one of two standards that advisors will follow. Number one is called fiduciary. Number two is called suitability. Now, let's break those down a little bit. Now, if you go see a suitability advisor, what that would mean is that advisor has to recommend something that's suitable. It doesn't necessarily have to be in your best interest, but it has to be suitable. So generally, that's where their boss told them, hey, we're going to be selling XYZ mutual funds this month.
Today.
Go ahead and make this fit your clients.
Yeah, you can almost make the argument that almost anything is suitable,
yeah.
right? I mean, almost anything is suitable.
That's right. I mean, but when it comes to a fiduciary, what that means is that advisor has to look out for your best interest. So they want to understand, what are your goals? What are you trying to accomplish in retirement? When do you want to retire? How comfortable are you with risk? And then based on what your comfort levels are, they're going to design a plan to help you reach that goal. So they are morally, legally, and ethically obligated to recommend things that are in their client's best interest.
So it is important that you know what that means
Absolutely.
and who one is.
Right, because not everybody in our industry is operating as a fiduciary.
Right.
Like Dustin said, this has kind of been in the news a lot here lately, and so I think some people are kind of under this false impression that everybody is a fiduciary.
Right.
Sometimes with accounts like IRAs or 401k rollovers, sometimes those advisors are held to what I would kind of recall or refer to as kind of like fiduciary light standards.
Yeah.
You know, they kind of have to act like they're doing things in your best interest, but there's no real penalties if they're not. Whereas a firm like Strategic Wealth Designers, we are full-blown fiduciaries on all of your assets or on anything that we recommend. So whether it's an IRA or a 401k rollover or money you have in the bank or a question about insurance or whatever it is we're giving you advice on, what we share with you has to be in your best interest. We have to talk about the pros and cons, which is another big thing that's really different. We have to tell you what's good and what's bad about anything we might recommend to you. You know, under a microscope, there is no perfect place to invest your money. Everything's going to have good things and bad things about it. An advisor that's held to a suitability standard, all they have to do is share with you all the good things. You know, so they might talk about great returns and, you know, the statements are really good looking and the web access is great, but they don't mention to you they're going to charge you 2 or 3 or 4% per year for that.
Yeah.
Whereas a fiduciary, if there are going to be any fees, we have to put it in a contract, we sign it, you get a copy of it, you have to agree to it up front before we were to ever charge any of those fees. So it's a completely different set of rules and standards, and the penalties are completely different. If we do something that's not in our client's best interest, depending on the severity of it, we could pay fines, we could lose our license, in some cases we could go to jail. Someone held to a suitability standard, they are really acting in the best interest of the firm that they represent. So if they recommend something to you that's not in your best interest, there's little to no penalties because, again, they can make the argument that almost anything is suitable.
So what kind, when I'm looking at for a financial advisor, and how do I know someone is really a fiduciary? Is there extra schooling, extra education, what is that?
Yeah, so first of all, I would ask. Now, a lot of times an advisor will kind of dance around that, and they won't answer, yes, I'm a fiduciary, or no, I'm not a fiduciary, because there is a specific advisor that's a registered investment advisor is going to be a fiduciary. We always recommend to work with someone that's independent, meaning they can recommend anything and everything that's out there.
I see.
Where a lot of the suitability advisors that Matt was just talking about, they're usually working for someone, or they're working for a specific product or something like that.
Like a bank or, you know, some of the big brokerage firms on Wall Street, a lot of times they're going to be just held to a suitability standard. So like Dustin was saying, you can certainly ask, but if you ask them, you want to make sure that they're acting as a fiduciary for all of your assets. So if you ask them, you want to ask, do you have to act as a fiduciary for everything that you share with me, or just some of the things that you share with me? It's a big problem in our industry. You know, some regulations have changed recently to try and solve the problem. In my opinion, the regulations or the path that they're going about it right now is just adding more confusion. It's kind of why we're sitting here today discussing the topic. And I think over time, it'll kind of clean itself up. But you know how the government works. You know, it's going to take years for them to
Slowly,
fix
yeah.
some of these issues. And
If
so
at
that's,
all.
Yeah, that's why we're out here today, really just trying to share with as many of our viewers that are watching right now that it's always important, we believe, to work with a fiduciary. I mean, why would you not want to work with somebody that's going to act in your best interest? But again, a lot of our viewers are going to be those that are in retirement already or getting close to retirement. And that's where working with a fiduciary really is kind of something that's a no-brainer that you have to do at that point. It's not really a suggestion. I kind of think it
Yeah.
should be a requirement.
Your brother-in-law may not be the best person.
Right.
They may be a great person,
might be
but
good.
doesn't necessarily mean that they're going to be able to act in your best interest. Sometimes your brother-in-law is working for a firm where they have quotas, or a regional manager that's coming in and putting pressure on them to recommend things that are good for the firm, but might not be good for you.
So when you're looking for this person, you want to make sure they're fiduciary. What else do you want to make sure they are?
Well, as I mentioned, as an independent firm, and what I mean by that is if someone's working for the bank, they're probably going to recommend everything that you have fits something that the bank offers.
see.
Or let's say they're an insurance firm. Well, everything that you have is going to go into an annuity or in life insurance, or they're going to recommend what they have to offer. Or like Matt was saying a while ago, Merrill Lynch or one of the big brokerage houses or something like that. They're going to say everything fits stocks, bonds, mutual funds.
Yeah.
Well, it's important to work with all of those. You want some things in the bank, you want some things in brokerage world, you want some things in insurance, so you need a little bit in each, and an independent advisor is going to have access to all of that.
All right. So the word of the day is fiduciary, and if you want to know more about it, all you have to do is go to the website. It's swdgroup.com. Stay tuned for more Strategic Wealth with Matt Dickin. It's right after the break.